Welcome back everyone to another video. Today's April 12th and it's Saturday night. So I'm gonna start let me start with a quote of the day. So quote of the day is going to be looking for one right now. I think this would be a good quote of the day. So this is gonna be by Mark Douglas, Trading in the Zone. So this quote starts with thoughts are energy because you think in a language. Your thoughts are structured by the limitations and rules that govern the particular language in which you think. So this is an important quote because you want to pre-frame, you want to have a model before you're trading your setup. So you know what you're looking for and you don't back out of the trade after you've already entered. It's good to pre-frame your trade, imagine the trade happening before it happens, and expect volatility in the market and don't get, if you understand that you may be on the right track and you understand the risk to reward and you understand your input, you trust your input and you allow the output to present itself without pulling out of your trades, then you just let the law of, what is it? Law of probability take into effect. So that's my take on that quote. Good quote, Mark Douglas, Trading in the Zone. Um, Another thing I want to talk about before I start showing results from last week is 5 reasons why you should not stop trading. So 5 reasons why you should not stop trading. One would be you haven't followed your trading plan or your trading model for a minimum of 20 consecutive trades. And this idea was brought to my attention by Mark Douglas. He said if you have a setup, let's say you only take trades in the direction of the daily, as like a correction setup on the daily time frame, take 20 of those trades, 20 different trades back to back, but with the same setup, with the same type of risk management, and see what your results are. So he said it worked for him. It worked for other people. Secondly, another reason why you should not stop trading is because you over trade every week. I noticed this in my weeks, my based on me journaling. I see that every like other week, I'll pay attention to the amount of trades that I took for the week, and then the next week, the very next week, I'll trade more than I did last week. And it's like not even by about 1 or 2% more trades. It'll be by about maybe even 20% more than I traded last week. So I would, if you're doing the same thing, I would, one, make sure that you're even journaling because most people are not journaling. You got to study. You have to study your own psychology and study the types of the type of trader you are and just refine the things that need a little bit more work fine tuning on, such as the amount of trades. Because the more trades you take for the week, the lower the probability you are to becoming a successful trader, for the most part. Then another one, this is going to be three. You take counter trades against the daily time frame. So this is probably going to apply to people who are more so swing traders. This probably doesn't apply to the people that are scalping or probably I don't know if you would call it intraday trading, but people who are taking setups in the daily direction. I would imagine that I mean it could be a mixture of day traders and swing traders if you're only trading in the daily direction. Counter trend trading would be if you're trying to trade external to internal instead of internal to external. If you're trading with the trend, you want to trade internal to external. And then number four would be if if you have not been consistent with screenshotting your setups, this is another reason why you need to keep trading because for someone like me, I about maybe 2 or 3 weeks ago, if you look back at one of my videos that I posted, it was about using this Notion company, Notion, Notion. Notion, if you go on that site, they also have an app where you can also journal with your trades. So I use TradeZilla and I also use Notion. Notion, I got the free version, and with them, I'll have my screenshots saved in there when I'm taking some setups. And I haven't been consistent. What I need to work on is I need to work on every time I enter a trade or even before the trade happens, I start screenshotting, getting ready for the trade setup. And I'll send it to Notion, and then I'll do before getting in the trade, during getting in the trade maybe, and then definitely after the trade has been complete, whether it goes into stop loss or it goes into my take profit, and then I'll also document whether it was a loss or a win, um, or a break even. And because one of the break evens I had was last week was NFP, and yeah, with last week being NFP, I took this gold setup and it was a really good gold setup, but it was I had like a small take profit just because it would have technically been a break even if I let it run to my if I put stop loss and profit, or right at break even. But I seen around London session, it started coming back to where I entered, and it was NFP, so it was a good area. The area was correct, but it was headed to my stop loss. I came out, it wicked my stop loss, then stop loss area, and then went into the right direction that it wanted it to go, that the market wanted to go in. So those are things to understand that, sometimes it could be a good setup, but if it's like something like NFP, you have to be mindful that you could have the right direction, but it might not be the right time to get in. Maybe you want to wait until the market, whoever's moving the market, to push price back to your area of interest, and then whether you do trade on NFP or don't trade during NFP, to take the trade or not is completely up to you. My thought process is many times your area of interest is a very good spot at that moment during NFP, CPI, FOMC, but it might not be a wise idea to trade around, New York time, especially when news is coming out for those type of times, because a lot of times you're gonna get wicked out even with your stop loss in spot in place. You're gonna get wicked out. And then price would a lot of times go into the right direction. So it might not be a wise idea to trade that, but it's completely up to you. I will sit out for things like that. Um, Another thing would be, and when you take screenshots of setups, it's it's like photographic real estate. So it's something you can always look back at or even remember in the future when you start taking other trades. Because the thing is that there are patterns that repeat themselves in the market. However, not every pattern will play out. So that's why it's important to use proper, consistent risk management because even though you might see the exact same thing that happened before happen on this pair or the same pair, um, it only takes one person across the country or even in a whole different, you know, across the world to make the market move in a completely different direction compared to your directional bias. So once you keep that in mind, then it will help you so that you stop over leveraging and stop over trading. Last one is not having consequences for your mistakes. So me personally, as of right now, since I've been documenting from, I think I've been documenting maybe from about November, December. Since I've started doing these videos on YouTube, I have not had any consequences for my mistakes. And I believe I should because if I know that I have consequences for certain things that I shouldn't be doing in the markets based on my trading model and the way that I trade as a person, then it'll prevent me from taking certain trades and just remembering that I'm holding myself accountable. And if I want to if I want to become a successful trader and or a trading coach, then what I have to do is be consistent, be able to show these trading journals, openly show these trading journals so that people are able to trust the process. And if I can't do it, then that just goes to show others that I am not a reliable source um, when it comes to being a trading coach. With that said, that is pretty much the five things that I want to give you guys as reasons for why you should not stop trading. If you guys have any other reasons why you should not stop trading, drop it in the comments. Next is I'll start sharing my screen to show you guys my journal. I haven't been showing dollar figures anymore because I think dollar figures, when you're showing dollar figures, it's just, it might mess with your psychology. So, because it's really risk percentage that matters versus the, let's see, how does this look? Yeah, I don't know if I like that. Hold on. Just keep it like this. Okay. All right, so this is gonna be TradeZilla. This is my win rate. My win rate has been 21% lately. Not the best. Um, if we compare last week compared to this past week that we just had, you can see that I had 21 trades last week. Was it 21? 5, 6, 7, 8, 9, 10, 11, 12, 13. I only had 13 trades the last week. So previous week 13 trades compared to this week that just passed 15 uh 25 30 33. So 33 trades in total. That's about let me check the difference between 13 and 33. 13, 33. So that was 153% increase. So 13 to 33 is 153% increase based on the amount of trades that I was taking the previous week compared to the last week that we just had. And that's obviously not good. And I want to hold myself accountable. So the way that I'm going to hold myself accountable now so that I stop over trading. And this is a reason why you should be journaling because you can look back and see why you're going wrong. You can look back and see what you're doing wrong and what you could be doing better. And then from here, now when you compound that, then you compound good habits, which leads you into becoming a way more better trader than you were before. And then from there, you just become a successful trader, and then it just takes off from there. So that's why the compound effect is essential. Um, Now, one of the consequences I'll have for this I came up with would be me just, I would probably say, mm, I'll probably, because I have trouble with CapCut, what I would do is just 50 push-ups and then include it in the video. But I'd have to probably do shorts instead because CapCut and iMovie it's like difficult for me to post. Like if I do iMovie, I can include the push-up video if I got like a penalty on my for myself. I can include it, merge it together, but the quality of the video from downloading it from iMovie, it just messes up when I upload it to YouTube. So if I were to just and then if I did use CapCut, I can't edit it on CapCut because it's requiring me to remove like 27 gigabytes and I don't know, it just virtually seems impossible because I deleted so much stuff and it just clearly wasn't enough. So um it might be easier for me to just do shorts of like video shorts on YouTube for any time I go against my trading plan. So my trading plan would be only trading with the daily directional bias. Don't trade against the daily directional bias. Uh, Only trade 1 to 2 setups, at least 1 to 2 ratio setups. If it's not a 1 to 2, I'm not gonna take it. Um, what else? Don't take trades with the same pair but going against a completely different direction. For example, don't trade a buy setup on GBP USD and a sell setup on Euro USD because that means that you have faith in the US dollar going up, but you also have faith in the US dollar going down. A fourth would be to document, journal the setups before, maybe during. That the during is not that important, but after. So definitely before and after for each trade setup that I expect to happen and or each trade that I get into. I want to make sure that I'm documenting each of them into Notion so that when I look back or maybe in the future, I can always remember that there's something similar to a setup that I'm seeing in the present market. It gives me more confidence in taking certain trades. And it's just a form of photographic real estate. So That is that is pretty much. I don't know if there's anything else that I would add to that type of confluence, just because it's not like I can say I won't trade around five. Well, five markets normally close around five for what I trade, but I really wouldn't say I wouldn't trade like Asian session because sometimes there are setups that happen during Asian session, especially JPY pairs. Um, but yeah, I don't if I don't do those things that I just mentioned, then each of the things that I don't do that I just mentioned will be equivalent to 50 push-ups as a penalty. So I think it's important again to give yourself penalties for things that you want to implement into your system because if you know and if you believe that the things that you want to do will help you, and you don't do it, then it'll go against your goals and it'll just cause you to, if you just disregard, you avoid doing what you think will work, then you're just doing the same thing over and over and over again and getting bad results is the definition of insanity. And it doesn't make sense. Next, what I'll do is I think this month though is looking better than last month so far. So far, I've already got 4 winning days. Last month, I had only 4 winning days. Very bad month in March. February was great. One, two, three, four, five, six, seven, eight, nine, 10. 10 winning days in February. January, I had 5 winning days. So I definitely see progress. Next is the charts. So now the last trade that you guys can see here, AUD NZD, was this one where my account grew 11%. So as you can see, I didn't even have to trade much. I only took one trade and one trade, like as you can see, 15 trades on Thursday led me to go down my account to push down 23 plus percent. Now, only one trade had my account grow 11%, which shows you that you don't need to trade a lot in order to become profitable. And the AUD NZD trade that I took was here. I was trading with the daily direction. So as you can see, the daily direction is bearish. This is the high. This is the low. If you look at the 4 hour, 4 hour is also bearish. And then we drop down to lower time frames, like the 15-minute time frame. There was a market structure shift around this area, break structure, and then test, and then take out this low. So this was my entry. Well, I exited down here, but my entry was here. Stop loss above, stop loss above the high, and then this is about a 1 to 5. If you look at it, you'll see it's a 1 to 5 risk to reward. And again, this is a small account. This is a small live account that I'm trading. So as you can see, my profit was only $39. But on what is it? Last week, I finished around my equity was around $300. I started this past week with $300. And then I finished this week with about $151. So I lost about 50% between last week ending and this week ending. Um, but yeah. And I want to this past week, you see a lot of like 15 trades, 9 trades. You see a lot of trades that happened throughout these days because I was looking at smaller time frames. I wasn't really paying attention to like the bigger picture on how I was pretty much going against my trading plan. So these are reasons that make me understand that I need penalties to stop with or stop going against my trading plan um and don't just be more consistent with the trading plan because another thing is that I am glad that I did was not just let my put my stop loss in profit and then let the trade just run because if I did that then my if I took away the take profit is what I mean. If I just removed the take profit, just had it run, and then just kept my stop loss up here, obviously entry here, and then let's say I was looking to go for a deeper take profit, so something maybe down here. I would have ended the week off with instead of 1 to 5, I would have ended off with around 1 to 3. You don't even know if the market could be pushing all the way up and go from here to here and take me out. So if I still held onto this trade and didn't just look to take out this wick right here, take out this low, then what would have happened was either I said, hey, I'm not gonna, keep this trade through the weekend. There could be a weekend spread that can lead price to rallying all the way up and take me out, or price itself can all just go take me out. Just so many different variables. So I'm sticking to my plan for now with the way that I'm trading. I'm only trading from internal to external. So from a high to a low, taking out, taking liquidity out, and then that's pretty much it. Euro USD. This is gonna be like some weekly setups that I'm thinking have some potential because the DXY is bearish, which means the US dollar is dropping, and then JPY is going up. So the JPY is getting stronger, which means we should be looking at buys. So we're looking at GBP JPY, we should be looking at sells. We're looking for sells. USD JPY looking for sells. If we're looking at USD CAD, we should probably be looking for sells. Um, and I'll share with you guys my thought process on Euro USD. I might do weekly videos for setups that I'm thinking of taking, and then I'll just share it. So if I were you, I'd probably look out for like videos during the week that I might drop for videos based on, me either have already hopped into a trade or about to hop into a trade and show you guys what to expect if it does happen. Reasons for why I would enter just so that we're on the right track. As you guys can see, though, weekly is bullish. We're above the EMA, the weekly EMA. So weekly is bullish. Daily is also bullish. The daily low is right here. So this is the daily low. That's actually not the daily low. The daily low is actually all the way down here. So this is realistically the daily low. So we can expect price to probably come down to this level right here because it seems like it's an important level. It's a good area of interest on the daily time frame. So I'm going to also 50% for hour. Yeah, I'm gonna drop this alert down to this level right here. And hopefully, price could fall in that area. If it falls all the way down here, I doubt that would happen. But yeah, price drops around these areas of interest, then we'd be looking for some type of smaller time frame confirmation to know if we should take the trade or not. That's on Euro USD. JPY looks like this. And on the weekly time frame, This would be the high of the weekly time frame. Then on the daily time frame, the high is all the way up here. This is the low. 4 hour time frame. 4 hour time frame appears. Look at the 15 minute. Mm. Yeah, so the 15 minute is bullish. So we would expect price to make it. I would probably say price might make it all the way to up here. Because if you look at the 15 minute time frame and we're looking for like imbalances, I I can guarantee you if I do a replay all the way and zoom into this area, we're probably gonna see maybe a 2 minute imbalance. So I would say that price, see, like there's some imbalance. There's like fair value gaps around around here. So they might bring price into these areas that have not been filled. So these are key levels to look out for. Um, on top of that, let's look at the daily areas of interest because that's also a part of the plan. So daily areas of interest would be first, let's look at the weekly. Weekly is, I'd probably say these are some good weekly areas of interest right here. But the daily time frame would be, I mean, this would still be a good daily area. I mean, not actually not really. 2, 1, 2. Okay, this right here seems like a good area of interest. Price to come up around here. And also right here, which means I'm moving this alert all the way up here. So now we're gonna look out for that on GBP, JPY, USD CAD. I'd probably say the high on the daily time frame is here. And the daily areas of interest would be, look at the weekly first. USD CAD, there is no weekly area of interest. Daily area of interest could probably be up here. And another area of interest could probably be 1, 2. This doesn't look like a daily area of interest. So yeah, I would just really just leave it around here, but I would want price to get to at least 50% of the move. However, I doubt that's gonna happen, so we're probably just dropping at this point. Like price might just go from here up here and then drop again. That's what might happen. Or even here. Who knows? Here or here. Take out this high or this high. But yeah, we'll see what happens. USD, CHF, looking for sells. Daily area of interest. Weekly is bearish. Daily is bearish. 4 hour is also bearish. Here's a daily area of interest marked out. Last time price was here is around last October, September, and August. So it's a good area to look at for sells. Is a 4 hour. The 4 hour is also bearish, but in order for it to go back up, it's gonna turn bullish then the daily and the weekly would still be in sync. So unless price were to close above here, which daily the daily high is all the way up here. So as long as daily doesn't close above this structure point around here, then we're good. If it does, we're chalked. But if it doesn't, then we're good here. Next is USD/JPY. Now for USD/JPY, we're looking at sells. Daily's bearish, weekly's bearish, 4 hours bearish. For a daily area of interest would be one, two, three. I mean, we could have a bearish. We could have a daily area of interest. Three, two, June. Okay, so this could actually be a realistic area of interest right here. But also here, 4 hour would turn bullish. I would recommend this area right here versus this area right here because there's a lot of wicks and the wicks are likely going to get taken out. It's also right beneath the discount versus premium area to take a trade. So I would I would rather take a trade up here than here. It gives us a better risk to reward. On GBP CAD, there are not four daily areas of interest. So I was thinking of taking this trade, but I'd rather not. So I'm gonna move this all the way down. Then for US 30, I'm in a similar trade with NASDAQ. They both look the same because the weekly is bearish, the daily is bearish, and 4 hour is also bearish. So this same exact trade that you see right here, I actually take it on NASDAQ. So I'm in some drawdown, but it should be giving me about a 1 to 2 at least. And that's pretty much how we look right now. So if we look at the 30 minute is bearish. We could get price to come back into like, some type of imbalance up here. Or it could just fall from where it's at. But we'll see what happens. What did price? Yeah. If you look at, yeah, I think we didn't go over gold. Gold, I'm really not looking to trade right now because it's at all-time highs and there are no daily areas of interest for me to even bet money on. Price to, getting pulled towards. I know that the daily's bullish. I know that the weekly's bullish. I know that the 4 hour's bullish. And there is some imbalance here. There's some imbalance here, but I there's just not enough confidence for me. I think the daily areas of interest hold more confluence, and gives me more conviction into taking the setup. But when it's not there, I just lose interest and I lose faith in the trade. So, um, if you guys have any questions or anything that you want to share, like, comment, subscribe. Hope you guys like this video. Again, I may or may not be posting throughout the week based on the trades that I might be taking, depending on my schedule. And that's pretty much the end. Hope you guys enjoyed this video. Peace.